Hi everyone, today let's talk about Fed Kashkari. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Fed Kashkari came in extra hot this morning. It seems like we've been getting a lot of Fed presidents and Fed members coming out hawkish. We talked about one yesterday and we got another one here today. And you can see he still thinks there's going to be 2 rate cuts this year, but he also said that inflation has stalled out at least in the short term. And if everything in the economy continues to be strong, including consumer spending, why cut rates at all? So this led markets to be very fearful, thinking that there could be no cuts this year. This is really the first time we've seen such hawkish talk from the Fed. Everybody's still been talking about cuts, some of them sooner, some of them later, but now we're seeing Fed members coming out and saying maybe no cuts this year. And I think that's going to be quite bearish for markets, and markets sold off a lot, supposedly on the back of this news. And moving over to fear and greed, you can see we're all the way down into neutral already, down into the 49 range, and you can see we are breaking down here on this chart. Below 50, we have not been there since all the way back here in November. Now that this is kind of broken down, you can see this is a zone where you can kind of find support and then eventually break to a new low, and I would expect that to happen based on this chart. So still looking at greed across the major indicators: momentum, strength, regular greed, breadth, still in extreme greed, and you can see market volatility spiking up here all the way into the 1630 area. We talked about that being possible yesterday, and that is extreme fear for market volatility, safe haven demand, fear, junk bond demand, fear. So some indicators switching over on the bond side, and definitely volatility. Moving over to seasonality, the question here is this a push into that 12 April low, or is this just that shallow dip here into the 5th and the 8th, and then we're going to get a slight bounce and then an even deeper low? Certainly seems like that is possible based on the fear and greed charts, but keep in mind seasonality still sideways until we see that big mid-month dip. In terms of the calendar, this was supposed to be a bullish day. We were supposed to see bullishness pretty much across the month here. Obviously, we have not seen that so far. We'll see how it plays out tomorrow. We have consumer credit as well as the unemployment rate, unemployment data tomorrow, and then bullish Monday, bullish on the 10th. We get FOMC minutes there as well as CPI, and then we get some Michigan data. Again, bullish on that Friday next week. Moving over to the economic calendar, you can see there's pretty much nothing on there for today except for initial jobless claims. Those came in a little bit higher than expected at 221. Previous number was revised up here to 212. And that was higher than expectations as well. So everything higher there on initial jobless claims. Fed balance sheet down about $45 billion. So another pretty substantial runoff. They said they were going to slow this down, but it doesn't seem to be doing it right now. And then tomorrow, don't forget, non-farm payrolls, unemployment rate, just like we talked about, big jobs data coming out tomorrow morning. Moving over to max pain, you can see we did get well below max pain. We did get to those first couple of put walls here. So 510 is really the first major one. 516 mattered a little bit. We had these big call walls. We were pushing up into them. We knew that that was not going to hold up in those ranges. We've been talking about it for a while. We ended up breaking back down into the middle of the range. Almost looks like a bearish finish here, right around 509, 510 potentially for tomorrow. Put call ratio still quite low at 1.4, and total options up at 1.4 million. And moving over to the charts, obviously today was a bit of a dumpster fire. You can see it was down 1.22%, massive move to the downside. We were strong in the pre-market, strong in the mid-session, and then supposedly on the back of those comments we got a massive dip. You could also argue we were just at resistance again. Didn't expect to see as big of a move. You can see here we took out 3 levels, 1, 2, and a third one here right at the end of the session. Did close below it. My level here is 513.27. Did get back above it after hours, so we're at support. If that holds, maybe you see a little bit of a bounce. Momentum and RSI very bearish. Volume on the day extremely large, and this was a very wide ranging candle here today too. So we gapped higher, and you can see the candle itself was almost 2% from top to bottom. If you include the wicks, it's probably about 2%, so that's a big move on the day, and I would expect to see some follow through. You can also see we took out the 9 and 21 EMAs. First time we've seen that in a while here on the daily chart. Last time we were below the 21 was all the way back here in mid-January. Did end up holding, but we didn't see any huge sells like this. This is definitely a candle we haven't seen for a while, and this could be the start of something bigger to the downside in my opinion. Moving over to the Tasty charts on the daily, you can see that big bearish candle. Look at the volume on the day. This is RVol. We haven't seen a massive RVol like that since about the end of March, so not too long ago, and that was at the high, and since then we've sold off. Last candles we saw in that same zone were also sell candles. Got a slight bounce from there, but seems like this might be the culmination. ATR stops are right at that 34 EMA at 511.51. If that zone breaks, that's going to be a big push down to at least 503 in the bottom of the ATR ATRs here. Momentum obviously bearish. And looking at the 4-hour chart, you can see we finished right at the bottom of those ATRs. Massive volume candle here. You can see it on this a little bit better. Again, we've had candles like this, and they ended up being sell candles. We had sell follow through, but we're at the bottom of the ATRs, coming off of that ATR stop. Figured we'd hit that zone. Sure enough, we did, and then we sold off, and you can see on the 4-hour here, took out all the EMAs and SMAs, bottom ATR down at 512.16, and that looks like it's set to continue. And you can see volatility expanding as these flare out here, which is not a great indicator as this structure is breaking. Moving over to the NASDAQ, similar thesis, up pre-market, quite a lot actually, up to that level, hit my level almost to the penny, 446.66, and then again, 3 massive bearish candles. Just this one candle here was 1.44% to the downside. Overall on the day, 1.5% to the downside. Massive candle. Got the 55 EMA here on the daily chart, 434.11. That is a super critical area. 433.24 also super critical. Momentum and RSI bearish. So everything here looks quite weak, and you can see this looks like a double top. You have a midpoint here. If this breaks down below that level, you have a long way down in my opinion. So keep this in mind. Again, a very wide ranging candle. If you include the top to bottom, puts you at about 2.5% on the day. So big downside. You can see we're getting a slight bounce after hours, but wouldn't factor too much into that. And you can see huge volume on those selling candles right up to the last moment. Moving over to the Tasty charts, you can see very similar to the SPY, big bearish candle after hitting that first ATR to the upside on the daily chart. You can see we did sell all the way to the first ATR to the downside. And again, look at this volume. So we've had no volume. Then we got a big volume spike on this sell candle. ATR stopped down at 430, so it's hanging in there. Got the 55 EMA there at 431.85 on the daily chart. But realistically, I think this is probably broken here. And then you have the 89 EMA all the way down at 421.65. Would not shock me if we did get some selling price action down to that level. And then jumping over here to the 4-hour chart, similar to what we saw on the SPY, hit those ATRs, sold off. This is why it's important to watch those levels. Hit that level almost to the penny, wicked it twice and sold off. Almost hit that lower ATR. Current lower ATR is at 432.40, which gives you about another 1% move potential for tomorrow. And again, look at that volume on the selling. Makes sense. Everything continues to look bearish going into tomorrow's session. Moving over to the Russell and the Dow. The Russell actually doesn't look as bearish as the other ones. We did get right into the same region that we've been in the last 2 days. So not as bearish. We did find some support right at the same lows here around 203.35. Bounced a little bit after hours up to 204.41. Momentum and RSI still bearish. Still have a level here, 201.88. And the 55 EMA there at 283. So not as terrible, but still not great. And then the Dow, look at this dumpster fire. So 1.34% to the downside. Massive move for the Dow. Looks like this rising wedge has finally broken below all the short-term EMAs and SMAs, and you can see it is a long way down to that 144, all the way down at 365.01. And then you can see the highly traded zone right here at 375. So not a lot of volume through here, and generally you expect it to move through those zones pretty quickly until you hit those highly traded zones around 375. Moving over to stocks that are moving here today, I wanted to highlight AMD down 8.26%, massive sell, momentum and RSI, both very bearish. You can see we came up, retested that SMA and sold off more on the RSI. You can see that a little bit better here. Came up, retest, sold off. And then you can see all of the structure has broken. We're below all the short-term EMAs and SMAs. And then again, you got that 144 hovering all the way down here at 141.83. Doesn't mean you can't see some kind of midterm bounces, retest some levels, but you would expect those to be met with sellers at this point. Definitely looks very bearish. You could argue maybe left shoulder head, right shoulder, or maybe you get one more little bounce into a right shoulder, but this looks very bearish. Right at what I would call the neckline here, 165.36. You can see right at my critical level, but big selling here on a name that's been very strong, rallying up over 100% since October. Moving over to Apple and Tesla, both of these stocks hanging in there today on a day that was a bit of a dumpster fire across the markets. Apple down only 0.5%. Momentum and RSI still bearish, and it was bearish, but still holding right at these lows. Again, I think if this breaks here, 165.71 is your next level, 154.45 is below that. But this is not a great chart. You can see clear double top, big selling off that level right at a midpoint. If this structure breaks down, I think it's got a long way to to go, but right now it just hasn't done it quite yet. And then Tesla, again, finding some legs off of yesterday's bounce, up 1.62%, hanging in this zone, 163.33. You could argue maybe the low is 160.90. Super important zone. Seems to be finding some momentum. Moving over to Meta and Microsoft, some of the only stocks here that turned out okay. Meta was up 0.82, gapped higher, wicked to this all-time high, and then sold off a little bit. 520.31, you can see a little bit of selling there, but momentum and RSI are bullish. A little bit of volume coming in. Seems like that might be at least a short-term top. See how that one plays tomorrow. And then you have Microsoft here. It's been on a massive run, obviously. Down 0.61%, right at the EMAs and SMAs, so you can see that a little bit better here, right on top of the 21 and VWAP. Momentum and RSI still bearish, but we've seen this before. Kind of bottomed out right in this same zone, slightly below the 21, found a level. Right now, trend support is 415. See if that level holds. You got the 55 EMA there at 410.99 as well. Moving over to staples and discretionaries, as you would expect, another day of selling here. Momentum and RSI, both bearish. Volume massive. You would expect this to continue. Still have a level at 74. At this point, you'd expect it to break. Maybe you get a midpoint here, double top. We haven't really seen that. You could argue maybe top here, midpoint, double top, sell off, maybe. But this seems like that first potential break. Sometimes that gets bought up. Maybe get a lower high around 75.40 and then sell off. Something to watch here. Otherwise, it could cut right through here, falling knife style. And then similarly here, consumer discretionaries selling off big, down 1.17%. Again, momentum RSI bearish. So below the level, that short-term level here, 178.36. Below that, I have 174.76. Moving over to communication and transportation here, you can see transport selling off 1.35%. Hit a critical level here at 83.25 and then sold off. You can see the wick gapped almost to the level and then sold off. Momentum bearish, RSI also bearish. Everything looks weak. Got the 21 down there at 80.89. Also have some trend support in there at 81.22. And you have a level here at 80.70. So pretty interesting. We'll see if this level holds. Still is very much a bullish structure, so it's not breaking down the way some of these others are. And then looking at transports, quite bearish here as well, 1.33. We're below all the short-term EMAs, 9 and 21, as well as VWAP. Hit that 55 right to the level there at 68.40. And then you have a level here, 67.85. So important zone, momentum RSI bearish. At this point, you would expect this to break down, and you can already see a double top forming midpoint. If this structure breaks, that's going to be a change of trend. And then you'll probably see this push back to the 200, which would be 63.33. Moving over to breadth, you can see both of these broke down massive on the day, took out the level. Next level, 36.66. At this point, you'd expect it to push down to 16. You can see we tested this zone before. I would expect it to push back down to this level here. We'll see what happens. And then looking at 50-day breadth, took out the level 68.66. Tested that last time, broke down now. 200 still sitting there at 59.71. Last time the low was around 52.81, and I would expect that to break here as well. I thought this was going to be that first kind of big roll. We found a bounce. Now we have a lower high. We're selling off. And that is typically the straw that breaks the camel's back. You can see this break down into that 30 range, and that is typically a pretty violent event. So keep that in mind over the next couple trading days. Moving over to yields, you can see yields actually did not go higher today on a day where we're seeing selling across equities, which honestly to me is a little bit more concerning because you can't really point to yields and say that's why equities are going down. Yields came down a little bit today and equities sold off a lot, which means it's probably structural within equities, and we could see more follow through in my opinion. And then moving over to the dollar here just for a moment, you can see we did get a little bit more selling, ended up bouncing almost flat on the day. Momentum still bearish, RSI still bearish, but we hit the trend line here, found a little bit of bounce. If this establishes a higher low, that means the dollar could potentially go higher, which could be quite bearish for equities. You can see that coming off pretty strong on the SMA there, pushing higher. Momentum is rolling a little bit slightly, but to me this kind of looks like a higher low, and then we'll see some more push. Moving over to bonds, J&K sold off just a little bit, did gap higher and sell off. Momentum and RSI still bearish. See if this structure breaks here. We've been in this zone many times, hasn't broken yet. Got here all the way back in mid-December, so basically flat for that time. And then TLT actually found some strength, 0.72, got back above the 144. It's right at resistance at 92.82. See if it can get above that level. Momentum rolling to bullish. RSI looking to break higher. Some volume coming in there. You can see we'd been lower. Last 3 days have been solid volume on a low, and then we got a bounce, so maybe that's a little bit bullish. It's right at this previous consolidation. It is down a little bit after hours, but looks a little bit better here today than it did yesterday. Moving over to volatility, as you would expect, we got a massive spike higher, 14% to the upside. I did adjust this trend line here to capture some of these tops a little bit better. Lots of tops right on that trend line, and you can see we wicked it again here today. So not quite to the price target. I think we said 1650 to 17 yesterday, actually right in that range. So we did end up wicking into that range. Momentum and RSI both bullish. So we saw this bounce, held here, got a couple of days, saw a dip on Wednesday. Weren't sure if this was going to just kind of dip and flutter back into the same zone, but we got a big move higher here now. Last time we got a move like this, again, it had a slight dip, rally, and then collapsed right back. And then we got higher highs in equities, but this looks a little bit different. We did hold on the high, which is a little bit concerning. And then you can see RSI looking like it's going to push into overbought conditions. And we haven't seen overbought conditions on the VIX for a very long time. Moving over to my accounts, you can see I was down quite a lot on the day. Pretty hard to avoid a day like this. I did roll up slightly. I was not aggressive with it because I was definitely concerned. We were at some resistance, pretty much the all-time high resistance. And we were starting to show some weakness, so I did roll up a little bit, but not a lot. And I was able to protect myself from a fair amount of the move. You can see down about 1,000 on my main account. And based on this move, I should have been down a little bit more than that, closer to $1,400. So I was able to protect from some of that on that move. Similarly here on my IRA, Russell was down $200. Was able to protect from some of that, rolled down on that position as well. And then for my poor man's covered call here, continuing to collect on that, I have a 435 for $3 for tomorrow. So at that position would give me about a $200 potential profit on that. You can see it's up a little bit after hours. If this breaks the 55 EMA, I think I'm going to reassess here. You can also see I did take off my shares and I put on the put position here for $1.88 at 434. So a little bit more of a protective position. Gives me some buffer from current price while still collecting some credit for a potential bounce tomorrow. Let me know down in the comments section what you thought of Fed Kashkari's comments. Is that what drove markets down, or is this the dip that everyone's been pointing to since we've had a straight up rally from October of last year? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.